Hi everyone. In this video, I'm going to walk you through capitalizing expenditures related to equipment. So, when it comes to equipment, what are you allowed to include in the historical cost, in the capitalized cost of that equipment? Well, obviously the sticker price, whatever you have to actually pay to buy the equipment. If you have to pay any sales taxes on top of that sticker price, just like you would pay sales taxes, say, if you went and bought a burger from McDonald's, you if it was $1 burger, you'd pay like say $1.09, right? Because there's taxes. Any sales taxes get capitalized into the equipment account. If you pay for shipping that equipment to you, what they call freight, that gets to be put into the equipment account. If you end up buying any insurance during that shipping, that goes into the equipment account. And if you have to do any assembly, installation, or testing prior to use, that can also go into the equipment account. Just like the golden rule for every other fixed asset, any expenditure to acquire or make ready for use. In case of acquiring, these first four are all about acquiring, and this last one is all about making ready for use. Let's see an example. On December 2nd, FlyerCorp purchased equipment for a manufacturing line in one of its buildings. The equipment had a price of $400,000, sorry, that's a big difference, and sales tax of 10%, both paid by writing a note. Delivery charges and insurance during transit, both paid by the seller in cash, were $950. FlyerCorp paid $2,000 in cash to have the equipment assembled and tested, another $1,000 in cash to have a special coating required for use applied, and finally another $500 in cash to have the equipment painted to match the color of the building for aesthetic purposes. Record the journal entry, assuming all of this happened on the same day. Obviously, that's a little wild, but let's say it did, for FlyerCorp's purchase of equipment. So here we go, December 2nd. Now, we know we're buying a piece of equipment, so there's going to be a debit to equipment in here. The question is, what are our credits and how many of those credits are actually allowed to be put into the equipment account? And so in this case, the first number up that we have here is the price tag on the equipment, $440,000, $400,000 plus 10% in sales taxes, which adds $40,000 onto it for a total of $440,000. Both paid by writing a note. So we're going to have note payable, $440,000. Remember, that's the $400,000 price tag plus the 10% extra for taxes. It says delivery charges and insurance during transit, both paid by the seller in cash, were $950. This was cash, but again, paid by the seller, not by us. And so that has no business in our journal entry. That has no business in our equipment account. We can just ignore that. FlyerCorp paid $2,000 in cash to have the equipment assembled and tested. So cash, $2,000. It says another $1,000 in cash to have a special coating required for use applied. So let's up that to $3,000 in cash. And it says another $500 in cash to have the equipment painted to match the color of the building. So let's add that, $3,500 in cash. And that's the end of our numbers, at least the numbers that count for us. So we could just add all this together and we'd get $443,500, and we could say that that's what goes into the equipment account. But we do have to make sure, are all of these things allowed to be capitalized to the equipment account? In other words, were they all required to either acquire the equipment or make it ready for use? Now, obviously the price tag and its related sales taxes are required. So that $440 is definitely going in our equipment account. The $2,000 for assembly and testing, well, that's required for use, so that can go into the equipment account. The $1,000 to have a special coating required for use applied. Now, you may not know this off the top of your head of whether it's required, so they told us for a fact it's required. So that counts. That can go into the equipment account. And another $500 in cash to have it painted to match the color of the building for aesthetic purposes. Aesthetic purposes simply means for good looks, for pleasing, for eye-pleasing coordination. That's not necessary. That's just something the company wanted to do. So that 500 is not going to be allowed in our building account. So what's going to happen here is our debit is going to be $443,000 even. But you say, okay, we have an imbalanced journal entry. What about that other $500? Well, we're just going to have to scoot this down and put another debit in here for service fee 500. You could call this a number that you call it painting fee, painting expense, service expense. You can give this any number of names, but essentially it's an expense because we're not capitalizing that expenditure. We're expensing it because it was not something that was required for acquisition or making ready for use. And that's going to be our total journal entry. All right, that's it for capitalizing expenditures for equipment. I hope you found this helpful, and I hope you join me for another video.